Hello, everybody. My name is Jeffrey Beamer, and welcome back to Earnings Call. I'm the senior investment strategist over at ewotrader.com, and we do this show each and every week talking about earnings. So if you've been with us for a while, you know we don't just talk about companies that have upcoming earnings. We talk about how to profit from these earnings events, and they happen every quarter and every week of every quarter, just like this week. Okay. So this week is the week of June 22nd, 2026. This brings a modest earnings calendar, but several widely followed names have the potential to influence markets and sentiment across many different sectors, including technology, transportation, financial, and the industrials. Okay. Now, Micron Technology really headlines the week this week. That will be the market's primary focus. But additional reports from Daktronics, FedEx, KB Home, Darden Restaurants, and Winnebago will all provide updates on employment trends, housing activity, consumer spending, and discretionary demand. So we're going to go through the list. We're going to take a look at the best potential candidates for trades, along with trade updates. And I got a new opportunity for you, all coming up right now. All righty. As we get into the week, it's a pretty light week this week. We're really only tracking 10 stocks overall. And you can see our list here, and how the list is divided is on the left-hand side. We have the stocks that the market, okay, option market makers are pricing in greater than a 10% move. They're pricing in double-digit moves for these stocks, okay? And on the right-hand side of the stock, are companies that have historic quiet moves, meaning single digits. They'll move maybe 3%, 4%, 5%. And we have different strategies for each. Okay. Two strategies for the breakout candidates, straddle and strangle, and one strategy for the quiet stocks, which is an iron condor. So we go through the list each and every week, and we're going to dive into these and look at the charts. So let me give you an example. Let's start off with an example of a quiet stock. Now, you'll look at the chart and go, well, that doesn't look very quiet. But I have highlighted with the ellipses and the vertical dotted line here the earnings for McDonald's. And McDonald's is a notorious quiet mover through earnings. In fact, on average, McDonald's moves maybe 3-4% through earnings. It's very quiet, and it just doesn't move very much. McDonald's is a typical, makes a regular appearance on our quiet list, and we trade it almost every quarter and have a great track record of success just trading McDonald's. Okay. And we trade it just 4 times a year. Okay. With earnings. All right. So this is a pretty good stock to do so with. So let's take a look at our list this week. Let's dive in a little bit deeper. And you're going to see that nothing really occurs today. It all begins tomorrow. We have Korn Ferry, we have FedEx, and KB Home. Most notable is probably FedEx, followed by KB Home, which is will be a glimpse at the home buyer sector, home builder sector. Okay, and then we move into the key earnings of the week on Wednesday with Micron. All right, Jefferies and Darden also are notable here, but let's get into the charts and we'll talk more specifically about them. Okay. So we begin with Korn Ferry. All right. Now, Korn Ferry makes an appearance here. This is a $70 stock. All right. And you can see here that it will have earnings tomorrow morning, first thing tomorrow morning. That will be Tuesday, June 23rd. And the average move here is 5%. So the idea here is that on Korn Ferry, we would sell a call spread above and sell a put spread below price. Okay, the current price, sell a call spread somewhere above, say maybe the 75, 77.50 bear call spread on top, and then maybe the 65, 62.50 bull put spread on the bottom. You combine those together, that creates the iron condor. All right. So $70 stock, sometimes you can find pretty good trade on. All right. But you're going to see here in a moment that there are some better stocks to trade. Okay. So, but Korn Ferry meets our criteria right now. Options market makers are pricing in about a 4.5% move. And on average, Korn Ferry moves 5%. So definitely a valid candidate. All right. Moving through our list here, we have FedEx. They will declare tomorrow, June 23rd, after market close. Now, FedEx has an average move of about 6%. Okay. Meaning it moves just through earnings. It has the potential to move up or down about 6%. Now, being a $330 stock, this has all sorts of strikes going up the price scale or down the price scale. And we can definitely find trades on stocks that are between $1 and $500. That's really the sweet spot for a majority of our trades on our quiet list. FedEx fits right in there. All right. So we'll talk about FedEx more here in just a moment. KB Home also comes in on Tuesday after market close. So the home builder will declare earnings on Tuesday after market close, and the average move here is just 6%. Now, given that we have kind of an interesting home building market right now in many respects, we have a new Fed chairman. There's impacting interest rates. There's all sorts of things going on. We could see a decent move out of KB Home, but again, we don't expect a double-digit mover. All right, typically with KBH, it usually moves around 6%. So you would think $3 to $4 would be the normal move for KB Home. And again, we don't know direction. We don't know if it's going to move up or move down. That's why we sell an iron Condor. Okay. And that way we increase our odds of success because we're just not sure. But anyway, we want it to move sideways is what we want it to do. Now, moving on through the list, we get to Wednesday. Wednesday headlines. Well, it starts the day, not headlines necessarily, but it headlines with Paychex. Paychex will declare Wednesday, June 24th, before market open. And the average move here, this is a $100 stock, roughly. Okay. And its average move here is just 5%. All right. So Paychex is typically a quiet mover, and we expect that. You can see the last earnings event here. Look, I mean, you could barely detect that there was earnings there, but that was the earnings event back here on March 20. What was that? The 25th of March. Okay, big quiet mover. And previous to that was the 19th of December. Look at that. I mean, just quiet mover for Paychex, and we expect that type of movement as well coming this Wednesday. Okay. Now for the headliner this week is Micron. Now here's the thing with Micron. All right. This is a $1,100 stock approaching $1,200, which it will get there. Okay. It will definitely get to $1,200. It will declare earnings after market close on Wednesday. That is June 24th. The average move here is about 6%. In fact, more recent, meaning within the past 4 quarters, it's been closer to 4%. Okay. Look at the last earnings event. I mean, barely budged. The previous earnings event to that, look at this, barely budged through the earnings event. Okay. Now here's the thing. Option market makers, there's 2 things that I would caution you on Micron. Okay. First of all, option market makers are pricing in a 10% move for Micron. Okay. There is a lot of anticipation here, meaning giving what kind of read are we going to get, not only on current sales, profitability, all the things that go into an earnings announcement, but also what the forecast is and what is the outlook for the sector. And everybody will be hanging on that earnings call for that news. So I'm expecting more volatility here than usual. So I'd be very careful with this. So risk number 2 here is that with stocks that are trading $1,000 or more, strikes are usually every $10. Okay. Now, when we're doing a spread, we are buying a strike and selling a strike. And when they're $10 apart and we sell that, that's 10% or $10 margin. That's $1,000 margin minus our credit. Now, for a stock like Micron, Micron does have strikes every $5. So at minimum, our risk is going to be $5 minus our credit. So if I can get an iron condor here, say 20% out of the money, I might do it. Okay. But with the volatility that's expected from Micron, it might be a good idea just to sit this one out. Okay. Because again, normally we get about 5-6% move. Iron condors have worked great on this stock, but now option market makers are pricing in a 10% move. We could see that additional volatility. I'd be very careful. All right. Moving on through our list, we have Jefferies. They will have earnings on Wednesday, June 24th, after market close. Now, this is a financial, and financials, when they're big financials like Jefferies, Citigroup, JP Morgan, Wells Fargo, Bank of America, they are so big that it's really hard to move the stock, especially within that sector. So I like Jefferies here. I mean, it's a $63 stock. If I can get an iron condor that's 10% out of the money, which I might not be able to do, I would probably do it. Okay, 10% out of the money would be about $6 above and $6 below the current price in the stock. All right. So if I could sell the 70s and sell the 55 puts, so 70 calls and sell the 55 puts, and we never do that naked. We always buy something further out of the money. Okay. I might consider it, but the likelihood of that and getting any sort of decent premium out of it is not likely. But I am watching Jefferies for the week this week. All right. Now, also coming up, and on Thursday, June 25th, before market open. So first thing in the morning is Acuity. Now, Acuity is a $320 stock, as you can see. Now, it has an average expected move of about 7%. Now, the thing with Acuity is that it can move a little bit more. You can see this little gap that it had dropped down, followed by the most recent earnings event, which, yes, was a big move, but it wasn't. That was about a 6% move right there. Okay. This was a little bit bigger. And considering that this has made some big moves in the past, this might also be one to watch. But it is a $300 stock with an average of 7%. And, you know, it definitely would be something to consider. Okay. As we go through the week. One that also would be definitely one to consider would be Darden Restaurants. Okay. Darden will have earnings on Thursday, June 25th, before market open. All right. This is a $215 stock. This is right in our wheelhouse. Okay. Darden Restaurants, good candidate if the pricing is there. All right. You can see the last earnings event. Look at this. Stock barely moved. It moved, just kind of like regular, just within the regular trend. Okay. Same thing here. Just small movement in the stock. Nothing, no big deal here. So we are anticipating that type of activity again for Darden, and we will definitely be watching out for that. So really, the bulk of our list this week is in the quiet stocks, but we do have two that have jumped over to our breakout list. And let's talk about breakout stocks for just a moment, okay? Because there's, like I said, two that we're going to talk about, but let's use an example first. Let's get to our list. Let's take a look. Sorry, let's take a look at our list, and then well, here's the example first, since we got it up. Okay, this is Akamai. All right, Akamai is a notorious mover. Now, Akamai does not have earnings this week, just like McDonald's was our previous example. It does not have earnings this week. Akamai does not have earnings this week. Okay. But it's a great example because Akamai is a notorious double-digit mover. It moves on average about 15% through every earnings announcement. This is great for straddles and strangles, especially if you can get the pricing at a decent number, which that is our edge. When we can get it at a nice number, okay, meaning about 10% of the stock's value. This is a great candidate. All right. Now, sometimes pricing is not there, as we'll talk about in just a moment. And this is going to be an important fact. All right. So let's take a look at our candidates for this week. We just have two. We have Daktronics and Winnebago. All right. So let's jump over to our chart and talk about it. And Daktronics is specifically the one I want to really focus on here, because Daktronics, they're going to announce earnings on Wednesday, June 24th, before market open. So Wednesday morning. The average move here is 13%. And this is a solid average. This thing moves usually 13, 14% through earnings. You see the last earnings announcement, you see the gap. Okay. And again, this is right now a $20 stock. Okay. So this gap down, going from literally $24 to $22, or, that is, that's a double digit move. Okay. This is a double digit move, going, starting at one day at $17.97 and ending the day at $20.90. That's a $3 move on a $17 stock. Okay. That's double digit percentage return. Okay. Now here's the thing. We run a we send out a new email every week with this list with more detailed explanation than we can even do in this show, called Earnings Edge. And we'll talk about how to get on that list. It's definitely something you might be interested in. But this was my trade of the week when I wrote that commentary. However, when markets opened up this morning, and I went to, go ahead and look at a trade, the pricing was not there. In fact, they have widened, market makers had widened the bid-ask spreads out, meaning there's probably some volatility here, but it was going to require, because of the pricing in the options, it was going to require a 20% move in the stock, 20%. To even break even, either up or down, a 20% move, either up or down, when the stock historically only moves 13 or 14%. Do you see that's a problem? Meaning, after the earnings event, when the stock reacts, and it will react, okay, and it may react double digits, but if it doesn't move enough, our trade will not be profitable. Okay, so I skipped this and went another direction. So what came out in our email is actually going to be different for our trade of the week this week. That's why you're going to want to hang on for just a few minutes, and I'll show you exactly what it is. Okay. So Daktronics, they're going to declare earnings on Wednesday, June 24th in the morning, and the average move here is 13.5%. We're going to close out the week with Winnebago. Now, this is, as you know, many of you know, this is an RV manufacturer. Okay. Typically, with the way that the consumer behaves, sometimes this stock has quiet results, but sometimes it has pretty volatile. And this stock can move, and has moved on average about 10% through earnings. Last earnings announcement, you can see it was pretty quiet. Okay. But look at the volatility here. Okay. Even though look at it, it gapped up, started the previous day at 40.33 and opened up the next day at $47. Okay. All right. So from $40 to $47, a $7 move on a $40 stock. Well, that is a big move. Now it ended up selling off and closed the day. Okay. But look at these pops you can see in Winnebago. All right. So here's the thing on Winnebago. The key here is if we can get 10%, meaning our trade, our straddle or strangle, for $2 or less. And that is not in the cards right now. They're pricing in a little bit bigger premium there. Okay. I'll keep an eye on it. It doesn't announce earnings until Thursday. Okay. So probably tomorrow or Wednesday, we'll be checking, all right, on Winnebago to see if that pricing comes in, because I definitely would want something around 10% of the stock price for Winnebago. Okay. All right. So that is our list. Now, each and every week, we do talk about a trade opportunity of the week. Okay. As you can see, our list here, pretty quiet. All right. Our key here is FedEx. Okay. That's our trade of the week. Oh, see, it just kind of gave it away. We'll talk about that in a second. Micron is really the headliner. And I like Darden, okay, from our list. Let's first talk about our trade from last week. Accenture was our trade. This is we have had so many consistent winners with Accenture. It moves 6% or less, in fact, usually less every earnings cycle. Okay. However, the market has decided it does not like Accenture. It does not like its forecasting. It does not like what its CEO has to say. This stock dropped an unbelievable 19% through earnings, 3 times the average expected move of the stock. 3 times the average expected move of the stock. So let's get to the results, because it was not what we like to see. Okay. In fact, for the second week in a row, we've had a stock that moved outside of its estimated move. Now, anytime we're dealing with these tech stocks, which we did, 2 weeks in a row, and maybe, we, have learned our lesson on that for right now with some of these tech stocks. They're moving kind of crazy. All right. We had what was our max available loss on the trade, which was just $330. Okay. Because of the credit, we did our strikes. Okay. And our max risk was $330 in the trade. This is why we trade small, but trade often. On our hypothetical portfolio value of $10,000, $330 is just 3.3% on portfolio. That is easily recoverable. All right. That's why we trade small, but trade often. All right. It's been an adage for longer than I've been doing this business, and I've been in this business for 40 years. Okay. So it definitely was something we don't like. But the good news is how you get out of this. Well, when it goes through both your strikes, either on the call side or the put side, you don't have to do anything. Okay. Now, if it stays in the middle of our iron condor, guess what? How we get out of it is we usually just let it expire worthless. We keep the entire credit, so we do nothing. In this case, we also did nothing. All right. Why? Because our put spread was in the money. Both the sold side and the buy side were in the money. And we just let that thing go through the exercise and assignment process. Our broker did everything. It took it away from us. We were now exit. We didn't do anything with the calls. The call spread expired worthless. We got to keep that credit. The put side is where the loss came from. And we minimized it to just $330. So that was our trade for last week. But we're going to go with another consistent performer for this week. All right. So I already gave it away. What's our trade for this week? It is FedEx. Okay. Now FedEx will be announcing, as we talked about, it will be announcing tomorrow afternoon. Okay. And we are looking for the stock to stay in this range. But look how much time you can see upper break even. There's a horizontal dotted line above and a horizontal dotted line below price. Those are the break evens of the trade. And you can see how much time the stock has actually been staying in this range. And Iron Condor is a high probability strategy. So that is our trade of the week. And we are sending it out to all of our earnings club our earnings club members. So that has already gone out to them, and that is our trade of the week. So we will talk about it on our next visit. And I will say that we will be pausing next week as we head into the 4th of July. Next week, there's only, I think there's Nike and Constellation Brands, and that's it. I mean, there's only less than 5 stocks that we will be focused on next week. So it's a very light week as we head into a shortened holiday week next week, because it's 4th of July a week from now, literally, well, 2 weeks, less than 2 weeks from now. So next week is a holiday week. Okay. We will be back on Monday, July 6th. And we will have, we should have a new little format. So you're going to want to join us on Monday, July 6th, when we will review FedEx, see how it played out. We will have a new opportunity for you, and we will have a slightly new format. So this will all be very exciting. We are looking forward to it. Everyone have a nice 4th of July holiday, and I will see you back here in 2 weeks. Everyone take care.